What's up everybody, Tom here with another video. In today's video, we'll be talking about the latest stock market news for the week ahead. We'll also be talking about our technical analysis top-down approach together on the US 500, Nasdaq, gold, silver, Bitcoin and more to try to find out what's going on this week. Last week was a bloodbath on the stock markets and of course, the rise of the retail trader and Wall Street bets. What does this week bring? Let's find out. Stay tuned. Alright guys, well as we like to always start off with, let's have a look at the heat map for the S&P 500 for Friday's trading. And you can see here straight away, there was a sea of red. Big stocks, Apple, Microsoft, Tesla, all down multiple percentage points. And of course, this is now starting to rise to the question of where does the stock market go next? And is this the correction we've all been looking for? Will February end up being a bit of a bloodbath month? Well, to answer that question, we always want to look at these types of things together. We want to look at what happened on all the indices. And you can see straight away, check this out, all very close together. Nasdaq 2% down, S&P 500 1.93% down, and of course the Dow Jones 1.7. Now, the interesting thing about the S&P 500 and Nasdaq is that the Nasdaq will be expected to fall more if the market continues to go down. The reason for this is, of course, it's the more volatile pair and it also has those more extended stocks in it. The other thing is February is also quite a weak month, which we've been talking about, and generally tends to be one of the weakest months for the Nasdaq as a whole. Don't ask me exactly why, but yes, the Nasdaq does seem to be the weakest of the markets over the February period. If we take a look at the sectors, you can see here energy was down 3.32%, and then of course XLK, the technology sector, was the next most hit. And as we suspected, utilities holding a little bit defensive up there with only 0.54% down. So very, very good hold there for utilities people. This week though brings a lot of earnings for us. So it brings us to the point where we see Amazon, Alphabet, after markets close here, of course, on Tuesday. We'll be looking at that in the market. Some other ones as well. We've got Alibaba Group. That'll be an interesting one considering all of the stuff going on with, of course, Jack Ma over the last couple of months. Then we've got eBay, PayPal, Snap, a whole bunch of big companies, of course, with earnings this week. If they continue to kind of just meet or under expectations, we could see further fall off in the markets. And you can see this by this beat data. So we've got here 87% is actually a beat rate, which is pretty high, but the beats just aren't that good. Last time round in the last quarters, they've been amazing. Remember, Wall Street always expects the best. Optimism is always a partial thing in the markets. And even when we see great results, that doesn't mean that it won't go down for corrections. So as we were just discussing, the question now becomes, how far down does this market go? Well, we've talked several times about how February is often a weak month and January ends kind of as a flat month after it's usually flurry at the start. We've also talked about in the election years and of course what happens over the data here since 1950. And you can see again, post-election years generally have been negative in February, specifically the Nasdaq copying at 3.3% on average. So still further falls possibly going on there before we even look at the technical analysis. But there's so much stuff going on in the markets right now. We've talked about the Schiller PE at 33.82. We've talked about how that's pretty high and it's due for a correction. We've also talked about the S&P 500 PE ratio being 37.82 and really getting up there to all-time highs. But we've also got a lot of other things going on in the markets right now. And of course, this brings me into talking about Wall Street bets again and the Gamestop situation. We've got here Elon Musk, and Elon Musk is a pretty big proponent, it looks like, against Wall Street in many ways. Now, he just changed his hashtag or his description here on Twitter to Bitcoin, and he actually posted just a little bit further down, in retrospect, it was inevitable. And this has got 583,000 likes now, and of course a whole bunch of retweets. Basically what he's alluding to is either he's purchased some Bitcoin or he's thinking of purchasing it with Tesla, and this led to a massive bull run on Bitcoin that was run for a couple of hours and then of course started to subside after that. And it really brings me to this idea that all of us are prepared to stack into anything right now, and FOMO and of course huge bullish calls are being placed all over the markets around the world. Generally, this is when Wall Street likes to swipe at us and, of course, push the correction through and get us to the new lower level, scare us a little bit, and then push it back up. So just be careful around these times. While things might start to look really negative, possibly there's some opportunity for us as traders. So let's get started in the technical analysis straight away. And I think the best place to start is volatility. Of course, we've seen the week of volatility come through. We've got Wall Street bets, as we mentioned before, with all of the bullish kind of movements on short squeezes. And at the same time, we've actually got Wall Street selling off all of the stocks. We've seen restrictions from Robinhood, restrictions from brokers all around the world actually not allowing retail traders to buy shares, which I think is completely ridiculous. And I do believe that that is something that needs to be looked at and really is exposing the system for what it is. And I'm sure many of you do agree with that. Being able to only buy one share, ridiculous. But anyway, that aside, volatility is up 33.1 on the VIX. And you can see a very strong hold here on the weekly. Incredibly important, it held on the weekly. We haven't seen a strong weekly rejection here in terms of back to volatility for quite some time. Notice over here, during the last kind of correction periods of volatility, they were short-lived. The last time we really saw some kind of volatility come in and hold was the election, and then before that, the September into October crash. That was actually the last time we saw any correction activity here from the VIX. So holding a 33.1 is pretty important. And of course, this 40 should be still an alert level set for us just to figure out whether the market could be expected to go further into bearish territory. The higher the VIX gets, the more fear, the more likely the market is to turn bearish. Let's just quickly talk about dollar index as well before we go into gold, silver, Bitcoin, and more. And that is the dollar index has been bouncing off this support and now trapped within two zones. So you'll notice here that the lows ever formed recently were around those 88, kind of 60 areas. We've now bounced off in our red area down here that we had highlighted for quite some time now. And we're trapped between the 90 zone and the 91 zone. If we go down to the daily here, you'll see why, and you'll see this trap forming. Generally, traps form before key event news, and we've just had the FOMC statement, but on top of that, this week we have non-farm payrolls. So we've got the jobs report coming out for the US, and I would expect that the US dollar will probably either gravitate towards the resistance this week before the news or the support this week before the news. And this is a very common occurrence. Generally, news breaks key levels, but the importance is that the market gets to those key levels. So 91 and 90, two zones to watch here for the dollar index this week. If we get above the resistance, still up to the 92, very possible, guys, and a very interesting zone. Previous supports becoming resistance in this green area here. And of course, our larger time frame, head and shoulders, inverse head and shoulders here could play out as well for further pushing the dollar index bullish over the week. Let's talk about Bitcoin now before we get into gold and silver and the rest of the stock market. And that is the Bitcoin moved because of the Elon tweet. Look at this. Look how much power Elon Musk has in the markets right now. He pushes it. And if we go down to a 1 hour here, he posts that post and you could see the explosive move from 32,000 all the way up to 38,000, kind of 500, and then back into the channel again. We were talking about the channel last week on the market. Let's go to actually the 4 hour here and just talk about this level. So we had the strong resistance around that 34,000. And then, of course, we had the strong support with huge buying potential at 29,000 flat. At these levels became very interesting. We're basically trapped in a zone. I expected that zone to hold probably to Chinese Lunar New Year. Now, it broke because of the Elon tweet, but we're straight back into that straight away. And this becomes the role reversal opportunity. Do we now have the buying potential coming through from this level? This is previous resistances, previous supports, and a very key level with moving averages as well on the 4 hour, where there should be some buying pressure coming back into Bitcoin over the next week. But it may also wait until after Lunar New Year to come out. That's been what we've seen over the last couple of years. Lunar New Year, a flat week followed by bullish momentum for Bitcoin and other cryptos out of that week. The other thing that we've got locked in now is we clearly know that there is a strong rejection off this. That means that if we get bullish pressure past this point, we've talked about this so many times, guys, if we get bullish pressure coming past this point, That then gives us close confirmation and probably negates really these last resistances over here. Usually, as soon as we get closed past that point, we completely bust the new high and we go towards the fabled land of maybe 50,000. It's very possible, based on the current hype, FOMO, all of those types of things going on in the markets, and also possibly a lot of exchange traded funds coming out for cryptocurrencies in the future. Let's talk about the differences between gold and silver right now. As you know, I'm a bit more bullish on silver than I am gold, and I've been bullish on silver for quite some time now, and especially over the last couple of months. When you're talking at gold weekly level, you can see here it's holding underneath that 20 exponential, the red line here. We go into the daily and it's been finding some rejection weakness. Generally, when the stock market's going down, gold has been manipulated to go down as well, and so does silver as the dollar index is generally rising. And you can see these rejections here look pretty bad for gold. One thing I would say is that this becomes a very key resistance. I'm going to have that now on my charts for quite some time. I really like breaking past these kinds of levels, because when we have rejections coming off these levels, when money flow goes through, and it does break eventually through this, because I still think gold is long over the short and medium term, then that basically triggers a whole bunch of sells and squeezes them out. And you see usually large momentum into the next level, being the 1950 or 1960 level. Always look out for these candles, guys. Super important ones to check out. But silver, the story here, we start on the top down. I want to talk about the monthly straight away. This is really cool. We've got rejection candle, and very similar to what we were just talking about, a bullish close above. That's then led by a very nice close coming in on the monthly here. And this is where Wall Street Bets possibly could move to next. And it is a dangerous game here, because there's a lot more at stake for the banks when it comes to putting the squeeze on silver, a heavily manipulated metal over time. But take a look at what this means. We've got close confirmation above the previous rejections over here and here. That is already bullish on the monthly. We've just closed another monthly with a very nice rejection candle here on the right-hand side, and we're starting to talk about some pretty nice technical levels. We go down to the daily here. Some very nice, again, bullish momentum coming through on silver last week. When Wall Street Bets and also other retail traders decided they wanted to make a move on this, they've been pushing it higher. And you can see, imagine if we got that close above 28 for the weekly. That would have been amazing, really triggering huge amounts of buy orders. But at this point, very nice close. And I think it's trading very technically, because again, look at this break. We'll put this horizontal here. I posted this in our Discord community, and I just wanted to say resistances. Nice test here. Get the breakthrough, goes up, comes back down. Really great little entry here on the 1 hour as well. And then it bounced up. And it just shows how great technical zones can be when you correctly analyze them. Look at this 1 hour. You got the resistance, you've got the support, you've got the bullish hammer coming off the 20 exponential. Great buy zone there for traders. And it's moved up. And it's now currently hovering on this 20. And hopefully it can continue to hold the 20 and move up over the next week. Nice work there on silver, and I'm pretty excited about that particular pair. Now for GameStop. What's going on here, guys? GameStop is pretty wild. Let's have a look at this stock. Well, firstly, well done to the retail traders. Being able to hold it at $325 for the week. Very bullish intentions here from everyone out there. And that's actually showing that everyone does have those diamond hands. The question is, though, can they hold it up? I think Wall Street's going to bet on the fact that people are going to lose faith in this and start taking profit and move on to the next thing. And I think that will inevitably happen. And I've cautioned several times, this is a very, very dangerous position. I know that people want to stand up to Wall Street, but it is a very dangerous position with incredible volatility. Nice weekly close, very strong into the Friday, pretty impressive. And it'll remain to be seen what happens over the next week. I really don't know where this could go. It depends on how many people continue to hold it. Obviously, the first target for a lot of people is that $1,000 mark. Can they get it to $1,000? And then so many people want to get to $4,000, $5,000. I think that it's going to be a tough week for this one, and there's going to be huge amounts of speculation each way. I've just been announced by a whole bunch of new brokers that have just sent me, because I'm members of heaps of brokers. They've sent me 10 different brokers have sent me restrictions on GameStop trading. So that just shows you again the manipulation that's going on from being able to actually allow retail traders to even trade this stock, which I think is really going to hurt it. That is 10 new brokers canceling the ability for me or for any of us to be able to trade that stock. That's pretty wild right there. It also probably points to why maybe some people will move into silver, because it's a little bit harder for them to stop theoretically. Let's talk about the S&P 500 right now as well. What's been going on the S&P 500? Well, here is a chart that I've got with the monthly pivots on it. I just want to bring this up because new monthly pivots will open, and we'll definitely be looking at that through the week. Definitely subscribe to the channel if you're enjoying what you're seeing and you want to find out more about these monthly pivots. We could see that over the last couple of months, there've been good kind of target levels for profit and also good target levels for resistance, with the monthly R2 here holding the market and then selling right back down to the central. I'll be very interested to see where the central opens in February to give us an idea of where this pullback also might be leading to. If we take a look here on the weekly, and we've got drawn up our Fibonacci and our level. Again, we're using the SPX whenever possible. Try not to trade on the futures in terms of doing your technical analysis. You'll notice here 38.250 fib pullback. Very common. Previous resistances, very common level. And in the middle of that, we have a weekly 20 exponential moving average, which again has been a multiple touch reload zone for Wall Street for strong buying kind of impressions. And I definitely think this is a key level that we'll be watching for February and for the week ahead if this crash continues to move very, very quickly. If we take a look at the US 500 futures, very similar 20 exponential, but I did want to just bring up this one and go down to a 4-hour chart and just show you the significance of this. So on the futures, we have peak to trough to lower peak to lower trough. So we've actually got a 4-hour change of trend. Let's go and have a look at the SPX now. Go down to the 4-hour, and what do you know? The exact same thing. We've got a peak to trough to lower peak to lower trough. That's awesome. That shows us change of trend. We're also moving forward here with a 2050 exponential potential cross here. We're underneath the 50 on the 4-hour. We haven't been under there for quite some time. We've got a cross incoming that we haven't seen ever since November now, with the crosses on the exponentials. And all of this could happen over the next week. So some very bearish kind of positions could be placed after these types of things occur. Remember, when two moving averages cross, often that will lead to algorithms entering the market, all sorts of things going on. Very awesome to see that on the S&P 500, and could be leading to further corrective kind of plays. Remember, peak, trough, lower peak, lower trough is a technical change of trend, at least on this time frame. We go now to the Nasdaq. Very similar thoughts here on the Nasdaq. We've had that big decline. Nasdaq has more movement up, so of course it will have generally more movement down. 20 exponential again has been the pullback zone here on the weekly, well worth looking at. And we have previous resistance structure across this level here, which should act as support. And this is the 12,000 psychological. So I think once the Nasdaq gets down to this level, it will most likely find quite a lot of bullish impressions, and then we'll have to see what happens next. But that's where, if the market continues to sell off, most likely it would stop and halt and find some kind of buying pressure from a technical perspective anyway. On to news this week. What else have we got going on, guys? Well, we have a huge amount of rate statements and other things. We've got the RBA rate statement on Tuesday, my time here in Australia, and this is forexfactory.com. We've got a bunch of employment and unemployment changes. We've got the monetary policy statements for, of course, Britain here, and then we go down to the end of the week and we have non-farm employment change. Very important. We will be live streaming that as well on the channel, along with our Monday live stream, so definitely join us for that. And as always, if you enjoyed this video, please remember to subscribe. Give us a big thumbs up. I know it was a long one today, but there's just so much excitement in the market and so many opportunities. So good luck to each and every one of you out there, and we'll see you live on Monday or in the next video. Bye for now, guys. Peace.